All right. Hello, everybody. Good afternoon, and welcome to the Bookmap Academy meeting. We skipped last week. Actually, I was away. It was on site here in New York City with Jay Trader. He was in town. Had a good event with him. It was great. Yeah, if you guys are in New York City, let's connect. Anyway, we'll get into the coaching in just a minute here and going through the content. We have a few other things to go through as well here. Just a second, and let me go through the disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. In the risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so this continues on. End of the summer here, so we're going to go with the summer date of the 21st or 22nd of September. So you can still get 2 times the credit here for your content, but you have to show trades from the Bookmap chart. All right, that's the consideration here. So this is a good thing. It helps everybody here when you show your trades because, trading from Bookmap, we can see and give insight not just on your setup, but on your trade management. And that's a huge thing. Also, verify your subscription. We're having this event right now is only in Discord. We're trying to bring more and more people into our community and really build up a really tight, strong community and keep the riffraff out. Just we want to have really focused content in here. We want our users to verify. They'll need to know, or they'll need to sign up for at least the Bookmap free version and have a bookmap.com email. And then they can partake in our Discord room. All right. And then winners for the blue jacket. So announcements. A big thanks to Slowdown. 3 months of Global Plus and with stocks and futures data, 1 month of Nitro, and a one-on-one with me was a new thing that we added into the mix here. Laura, congratulations for second place here, the runner-up, winning 1 month of Global Plus. If you guys want to, if anyone else wants to partake in the next month, you can use your QR or use the QR code here with your phone and get going. Some really great stuff from Slowdown, as always. Really very clear, concise content. He knows exactly what he's looking for. Is rather artistic, to be honest, and very inspiring to see such clear and concise journaling of the trading activity. So way to go, Slowdown. There's a few in here, really, top-notch work. And then Laura, really nice to see the progress in here and identifying some of the simple things in Bookmap, but they're so important. I know that you're looking at your anchored VWAPs. Well, here's a beauty right off of it here. You've got your high liquidity in the order book. This is where Bookmap can help you. Great stuff. Right, and then another one in here as well on your opening range, you've been looking at that as well. You got your checklist over here. We've been talking a lot about the checklist. Great stuff there as well. And then for the September, we're going to throw in Doug this time. One-on-one with Doug, as well as the other benefits from winning. You get the 3 months of Global Plus and the data as well, and then also a one-on-one here with Doug. Right, so especially you options guys might want to throw your hat in the ring for the blue jacket for this month. And I do have something else here as well for the Market Pulse. We're going to give you guys a free subscription to this. And the Market Pulse tool, you just need to be a part of the Academy in here, and we'll give you access to this. I believe that's the deal. Let's see. We'll provide the links for you guys over here in the Academy. All right, but this is a great tool. You know, adding widgets in here. Crypto is all free, but you can also add in U.S. stocks here. So we have indexes as well as individual stocks. It's limited. There's not a whole lot, but NVIDIA, Google, Microsoft, Meta, Apple, Tesla, Microsoft for you know, different algos as well. So it's a great tool, and you should play around with this. You can get a lot out of this tool, as you guys know. So yeah, that's, I think, everything on that front. And now we'll jump into the content, and we're going to start here with Caesar. I think he's here. Let's take a quick look.
Yeah, did see him a moment ago, Bruce.
Okay.
Yeah, he's got the mic.
Hello, everyone.
Good evening, good afternoon.
Hey,
how's it
Caesar.
going?
Good, thank you. How are you guys?
Excellent. Well, congratulations, first of all, to our winners. Really good stuff on Slowdown and Laura. Well done on that. And I've got two charts here to chop some wood on here. These are some great trades from yesterday. One of them is the CPI trade, and then the next trade is the 30 minutes in when there was a slight sort of pull back before we ripped raw upwards. So let me hand it over to you. Do you want to talk us through, please?
Sure.
Bruce, thanks, Bruce. So this is after the CPI. You're on New York time, aren't you? So we had the print at 8:30, and over to you.
Yeah. So it was a strong reaction to the downside, but you know, from what I could see on here, there was no continuation. When these, as strong as the move was, 30 points, which is a pretty strong reaction. If we don't get continuation right away, or even just like a tighter consolidation that, you know, just has a clear lid on it, then it's from my experience, we likely head back up into at least halfway through the range and try and repair it, right? So that being said, you just, anyone could see there was a lot of buying in here with all the green dots. Definitely more buyers than sellers. Once we got above the VWAP, you know, we can see right before my entry where I have the number one, we peaked below it, but the sellers couldn't push the bid down, couldn't push the ask down. So from there, I just set a limit order at the VWAP, and we got a little retest, and I was in. As far as trade management went, I was conscious of that kind of big order at 54.90. But we had so much room above that I felt it was okay to leave it to the standard deviation.
Nice.
So I moved my target up there. And once I saw that like the sellers weren't taking control above the VWAP like I would like to, I cut my risk in half from 2 points to 1 point, still below the VWAP. And then I just let the trade work. And finally the buyers showed up and took it higher.
You get some really good continuation there after the consolidation.
Yeah. I mean, this was a classic trade, so congratulations, well played. This chimes to what we were talking about a few weeks ago in terms of the news and the fade. Although often I think a lot of us think the fade sort of is a fade down, but it's the reverse, as you rightly say. There's the reaction down on the numbers, often sucker punching people, and then you've got that. We'll lean into it, Jack. We've got those higher lows-ish sort of in the first sort of 10 minutes. And then we just start to grind back up. You've lent in some technicals, fantastic. Although, as I often say on these news things, open and closes, can be cautious that those aren't always as respected as perhaps other times of the day. You get in and you let it go. The only sort of Monday morning quarterback point would be the price was starting to pick up. Liquidity, we can see, is being pulled above those green bubbles. Easy, of course, to say, but could have been worth sort of letting that run a little bit longer and maybe moving your target up as well as trailing your stop. But nice tight stop. It's about 3 or 4 handles, isn't it? 3-4 points. So that's a perfect stop in that news. It's either going up or getting out. So yeah, great trade. Really good trade, fella. No, impressive. Really impressive.
the CPI there at the start, I mean, you could tell that is just a low liquidity vacuum.
Yeah.
We had something similar today.
Yes.
The top of book, when it's really thin, it doesn't take many contracts. David and I were talking before the stream, and you could see in the order book there, right around price, even at this point, there's only 70 contracts. So a big sweep of a couple hundred contracts is going to trigger several hundred stops, which are going to continue to fuel that liquidity down lower. But once any actual volume comes in, that liquidity starts to fill in, and like David said, you just get that kind of like nice drift sometimes. So really great trade overall. Really great trade.
And if I remember rightly, on a sort of longer time frame, where it dipped down to was a previous low either earlier on that day or the day before. So there was a sort of broad level as to where it was going to bounce from. But yeah, no, fantastic trading.
I do have one question kind of about trade management at the end. Obviously, you're looking for that DWAP or that deviation at VWAP for your initial exit. But do you have a strategy plan where like you just want to be in the trade and you just trail your price a little closer so that you don't give back as much, but you allow that kind of trend continuation kind of setup sometimes? Or is that not something you've done yet?
In this situation, no. I like this is my target, this is my stop. I'm either wrong or right. But let's say during an RTH environment where there's no turbulence in the form of news or data releases, anything like that, if the trend is clear, even in the pre-market session, then I'm glad to leave a little bit of a runner. But in this situation, especially with the volatility, I was like, you know what, this is
and being a news event with CPI, it could retrace itself instantly.
Yeah, it's not as clean. Anything could happen at any moment. So I was just like, let's take what we can get here.
Makes sense.
Yeah.
Good answer. Appreciate it.
Great stuff. Do we change gear to the next one, Bruce, please? So this is same day yesterday. This is a good bold trade, buddy. Got to say, because it's a counter trend trade. 30 minutes in.
Well, I'm sorry. I just had a quick comment in here, Caesar. Like, I really like your higher time frame. You got your your VWAP here, like you said. It traded through it, back to it, bounced off of it, and I'm just in terms of entry, like I don't really see too much in here telling you about that. Maybe in here starts to look a little bit better, or over in here starts to look a little bit better. But one thing that just to note, and I just say this again and again and again, these little areas in here, like this little nook in here, the retest back to it. I mean, we see it so many times, again and again and again. Like this is a great area. I mean, your entry is perfect for that. If you're playing off of that, I just to be honest, I just feel better when I know I get a little more confirmation in here, because I don't know if they have more supply, especially like the event that you said. We just don't know. But that was my only comment.
Okay.
Yeah, that little peak of exhaustion here where you can see the bid drop, but like that little shade of green, which I know changes based on how much you zoom in, but on the zoomed in time frame, you could also see that just there was no more sellers there. And that's what, yeah, I like those little exhaustion signals like that, where you just see the bid or the ask, depending where you are, it either lifts or drops, nothing prints. It's something Stan is actually shown multiple times, and I've gotten more confidence on it from him. And yeah, that's it. That's the end of the auction, and the other side should take over from there, right?
Yeah. There's about a minute there of, well, maybe not a full minute, but like you can see like a 5-minute time slice there. There's a healthy little time period there where it's consolidating. One thing that I've done over times is kind of stop into a long trade, and just changing the way I enter a trade. Whereas I think that can kind of really get you into a trade with market direction, as opposed to like entering in on the market, or just kind of sitting on the offer, depending on like where you're going long or short or whatnot. So those are kind of really interesting kind of setups too, for these kind of like where they bounce off of a key level instead of like aggressively entering the market. Sometimes you can kind of like stop into the direction you want to go.
Okay.
Perfect.
But I don't have any critiques on it though. I think that this is a great setup, like David mentioned.
Yeah, it is. Great one. Right, thank you, Bruce. So yeah, this is the 30 minutes into the bell counter trend. Take us through another deviation trade, I think.
Yeah, this was like the last pop, because at 10 is when we got that huge flush, and then from there it was just riding the 1 minute 9 EMA down the whole time.
Sorry, guys.
Mm-hmm.
Hold on a minute. Sorry about this. There we
No
go.
worries.
There we go.
It's okay.
Okay. There.
Yeah. So yeah, this was nice and clean where if you zoom in there to the where it says 1, Bruce, you can see it a little clear.
You've gone right into liquidity there, haven't you?
Yeah, exactly. And this second attempt, just probably that's one contract printed there, right? Right where the one arrow is pointing to, just a little past it.
This one here?
No, just the tiny dot right in between them in the middle is a tiny little
right
green
here.
dot there.
Got it. Yeah.
Yeah. So that told me that, buyers were running out of momentum. And even when you have the heat map, it's like, okay, even though the buyers are weak, that's what's actually taking place. Should buyers show up, or it's going to take a significant amount of them to push it higher. So once you get those levels line up with the liquidity, like the standard deviations with the liquidity, it's just a gift. So yeah, I got in. Something I talked about the last time we went over my trades and in the sessions with Bruce was just being more patient for my level market orders, not get that slippage down, which is a big deal in futures.
Yeah.
So yeah, just a quick market order that got filled. That seller on the order book absorbed the price. So even though there was buyers, I couldn't push it higher, and eventually from there it just reversed.
Perfect. And in terms of your take profit ideas?
Yeah, this was not the clearest price action in the morning. It was clearly a downtrend, but again, it still had that CPI and like the numbers weren't bad. So CPI days and this whole week, Monday, Tuesday, Wednesday, even today, it's been a clear theme. Drop it at the open and buy it up. So I was very cautious that being bought up, because again, it was so clear every day that at some point they were going to buy it up. So I wasn't like, I'm not going to get caught in that buy up again. I'll just take what I can and
Perfect.
yeah, I'm okay with that. 5 points is 5 points, right?
5 points is respect.
5 points is 5 points.
Exactly. And yeah. I mean, it's again Monday morning quarterbacks. It's easy to say when we start to look at the DOM on the right here, we can look at the building of the large lotters and so forth. You should have held it, but as I started, to me this was a slightly counter trend trade considering the zip up you had on your previous trade.
Yeah.
So you were going the other way. So respect for taking 5 points out and holding on for 5 points.
What's really interesting here is that you ended up shorting at the peak of a negative gamma like area where market makers are essentially like leaning into the selling. And you can kind of see that as like your near price. If you look at the contracts, how they just kind of like decreased substantially from like 54.66 all the way down to like 54.60. And that the way that liquidity is kind of stacked there. But if you look above, like it's really, really thick above, right? Like even 2 or 3 points out, it's still at 90 contracts. So it's still pretty heavy above. So like there's definitely like some liquidity pressure that you're getting with just the order book. Even in this like really like zoomed in, 2-minute view, we can really see the liquidity pressure in that order book. They're just leaning on things. So I don't know if you were looking at it at that time, but that really screams out to me the way that I just see the orders there just scaling down. So that's really great. Like good short.
Five entry, it really is.
That is, yeah. That I mean, when you top tick and you get a 5-point move, like you're not looking back ever, I don't think.
But then when you see it drop another 50, you're just like,
it went down to 5,420, didn't it? But hey,
but see,
come on.
you got to remember too, though. You're day trading, right? You're intraday trading. You're not necessarily investing. You're never going to catch all of the moves, start to finish, right? There's ways to adjust your strategy too, though, right? So like you're using ES, right? So like let's say you're using one contract, right? You can split that up by using a different instrument. You can use MES, right? And like you can scale out. The only addition is you're going to pay a little more in commissions, right? So like you can soften some of these positions to give you some of that, continuation move. But, you really nailed it on the head. 5 points is 5 points, man, right? So
Yeah.
I think it's a
Exactly.
I
And
think
if you
it's
see my note there at number 2, I said the selling was very weak, right? Like there wasn't
yeah.
just a clear all-out selling. I love the
Mhm.
histogram to tell me how strong the selling is, and it just was not there.
Yeah.
So and the
But you
market's
know
been
why, right? Because of the way that liquidity is, right? Because there's
Right.
no real aggression. It's just like any buying is just getting absorbed to the upside,
Mhm.
and any kind of downside is just getting, kind of a little bit more amplified, right? So
Yeah.
yeah, no, you're
And
exactly right there with the volume.
yeah, and you're spot on. We've talked on this on several of the weeks, haven't we? Where I'll say something stupid like, "Oh, there wasn't really any selling yesterday, even though the market fell 80 points and so forth." But it's exactly what you're both
Yeah.
talking about.
Yeah.
It falls, but it's not really selling.
And
Yeah.
it's
I
a
know
concept
that's
that we really haven't covered a whole lot in the meetings, but the way the order flow interacts now that we have some of these larger realized movement days is to remind people about these things where like the book liquidity does matter, and like when it's thin you get these larger moves in both directions. So like you said, right, like take your profits early sometimes, maybe watch it just whip back in your face, or prepare for these kinds of potentials, and understand that your risk is slightly different on these days than when we have a 14-point range all day.
Yeah.
So
the old
yeah,
days.
really
Yeah.
great stuff.
Yeah,
Thanks.
really good. Bruce, before I swiftly move forward, as I often have done.
Sorry, I just can't. I gotta say something. I mean, like, no, it's I just from this view only is my comment, because I don't see the like kind of more, and that's fine. It's just an order flow event that might be helpful. So okay, I understand we're downtrending, and I see your line here, and you see liquidity, and you see the the move into that liquidity. This still looks kind of uptrendy to me in terms of volume, and then it trades into and through this, and then it chops around for a little bit, but right in here is some really good stuff, and the flip of the order book in here. So now the sellers are really coming in, and not only do they trade into this, they trade through it, and then look at the book flip here on the other side.
Yeah, that's nice.
So just keep some of those things in mind. If you do see something like that, and you do see that strong selling coming in, then you can look for maybe another level of liquidity lower.
One thing I don't see here, though, just in general, is we're zoomed in pretty tightly, so I don't see your stop. Did you have something that you're looking at,
I was looking
backstopping
at that
against?
yesterday because I always it's the bracket orders with
2
um
points?
2-point stop. Yeah, and I'm like, where is it? Like
Yeah, because
It's up here
I've looked at enough of your screens, like it should be
Yeah.
there, and I just don't see it there. 'Cause,
Yeah.
yeah, like I've said, I've seen enough of yours. I know it's 2 points for you. So,
TP's there, mind you, but
Yeah.
but I didn't see it there, so I didn't know if like you had a little wider on this time or not. As far as your entry, I think your entry is actually really solid. Like I see the consolidation, I see the short there right at the liquidity, especially if that's my key level and I'm looking to get into it. That little, essentially like low volume lurch into it, and then like a little bit of buying, I'd be willing to short there as well if I was looking at that short for that level. I do think that where Bruce mentioned for the flip of the book is where I would be scaling into, though.
Yeah.
I know that you're not necessarily looking at that, but it is in between your two deviation lines, right? So like it is still within your
Yeah.
reach there.
Yeah. I saw that
and
book flip after.
Yeah. Well, I mean, even not considering the book flip, right? Just the, like you mentioned before, the interaction with that liquidity there, and then the chop, the hold of the level, right? And then the continuation down. I would definitely be looking to, retake a short entry from maybe a little bit, maybe that 54, 63 and a half, probably where I'd be looking at it as it breaks through that, the previous low there is where I'd really be looking. Kind of continuing where he was. That's where I'd be scaling in. And then again, I mean, I'd probably keep my original stop, scale some percentage of my profits off, and then kind of let the trend go. But I do think that even if you're trading like one ES, I think that in general, maybe MES is a little bit better because you can scale those deltas a little bit easier. You can
Yeah, I got
scale
a
into
couple
it.
MES trades that I do, and those are the ones that I let run.
Yeah, and I think that that's good. If you're trading really only one ES contract, I would honestly recommend trading 10 MES. I know you're going to pay a little more in commissions, but I feel like you have a lot more potential in trending days. If you don't have really good trending days, if you know you're just going to be range bound, like I wouldn't necessarily do it for the next couple of days with FOMC on the board.
Yeah.
Because we're probably just going to, chop around a whole lot. But I think that, when like we have a potential direction, leaning into MES and letting your trade work for itself. Because the hardest part is getting into a trade, right? Like you already have where your in general stops are, right? Like you're looking at either a liquidity level or a profit level, your deviation bands, whatever your strategy is, you always already have some sort of exit point. So like the hardest part is just when do I take the trade, right? Like improving that, because you've already got the other parts figured out. So if you're able to get into a trade and then it works for you and then you take risk off the table, which is something that Bruce has mentioned a lot, but you still are able to let that trade go or, maybe work back against you occasionally, I think that you can have a lot better of a time in the market. And I do think that it really helps with anybody who struggles with FOMO of missing a move. Because at that point, you're able to get in the move and you can participate in it. But, whether a micro contract or an ES contract goes 20 points, nobody cares. You love getting the 20 points, right? Like, so you love to see it because you know that that's repeatable. Like that's something that you can do again and again. You can build on that confidence. So I think that those are great places where you and Veilfan are both at to where you guys need to like scale into is like, how do I get into and out of a position and carry a position for a longer period of time, as opposed to just having a rigid profit target? I think that'll help.
Yeah.
It's that evolution, isn't it, Bruce, that we've been sort of talking about gently over the weeks, isn't it?
Yeah, that's a great point, David.
Really, I mean,
and that's what I think. Like you keep mentioning our armchair quarterbacking. I mean, that's what something we can offer is like just some considerations in some of these directions.
Exactly.
And if that can be helpful, then maybe next time like you look at it differently. Or
everybody's going to have different views.
Yeah, exactly.
Like for instance, there's 3 traders here. And 2 of us had a similar opinion. 1 of us had a different opinion, and price only moved 2 points. And we got 2.5 different opinions, right? So like the more people you involve, you're just going to get more different opinions. So it's just really important to like take what you can work with, improve it into your toolkit, and then move one step forward, right? And then iterate on your approach constantly, which, again, ties back to the evolution and how journaling can really impact those things. So yeah, it's really great.
Thanks, guys.
Great stuff. No, well played, sir. Well played. Right, Bruce. I think we're going to segue over to Jack, aren't we, next?
Yeah. So let me
can indeed
try to get out of this. Okay.
So I am going to start with Laura today. Hello, Laura. I know you have to translate some stuff occasionally, so don't worry too much. Let me link this also in the chat so that you can click it there. So one of the things I want to look at is this opening range here at the start. Bruce, if you just want to go ahead and pull that one up.
This one here?
Yeah, that first image. Yep,
okay.
That first image. So in this image right here that we're looking at, you can see that we had a lower edge really, really defined in the opening range there in the lower half. Her opening range is going to be purple in the box there. But we broke out of that and then we failed to break out of it, right? And then you enter into a long setup on this. And this is kind of one of the areas where I'm a little confused about this, because when you want to trade an opening range, when you have a break and a retest, you want to trade in the direction of the break. So in this case, we had a failure, right, from the upper end. You would want to trade short from that retest of the opening range high. You wouldn't want to be long there in this case. And I think that that's kind of where you got twisted up here, or one of those things. Now, it does end up working out to your favor, but what you end up getting is a lot of chop in between. And a lot of times, especially in NQ, chopping around 20 points, you're probably going to get stopped out on that bad boy. Even ES is probably going to move 4 or 5 points there, though. What you would have wanted to do if you wanted to be long is you would have wanted to wait until you got that clean break at roughly the 18,776 area and then kind of adjusted from there. David, you're looking at the same thing, right? When you're looking at your opening range, you're looking for a pullback to your level and then a trade in the continuation of the breakout, right?
That's my favorite. Yeah, for sure.
Okay.
Definitely.
And then when you're looking for a rejection, you're looking for a rejection and a retest of that bound wherever it was, wherever your rejection was, right? It's like you're rejecting back into it.
And a rejection is a little bit like we had on Cesar's trade just now.
Yeah.
Because that failure was part of an opening range, albeit 30 minutes in. Yeah.
Yeah. Yeah, that's what I thought. So a key takeaway from this, and the reason I'm pointing this out is because you do it perfectly in the very next setup that I show, is that you want to get the break in the retest in the direction, and you want to be in the direction of the break, right? So you get the retest against you, nice clean order flow level that you're happy with. You've seen it interact twice now. Now you're looking to be long in that. And Bruce, if we can go to the very next image, we kind of just go over that really cleanly there.
Okay. Just a minute.
And then we can come back.
Yeah, there's something in here that I think is.
Yeah, we can go back, but
okay, go.
While Bruce loads that up, sorry, Jack. Sorry, my bad.
Go ahead.
I will take a trade very early on.
Yeah.
Without the retest, but I'm relying on Ninja as a thing I regularly talk about, is that ATM, the automated trade management. So literally, as soon as I'm sort of 2 ticks up, 3 ticks up, it goes straight to break even.
Yes.
It's high risk. As you know, and it looks after itself, so to speak.
Well, it's high risk from a risk reward standpoint.
Yes.
But it's not high risk because you're so close, right?
That's it. Yeah. So most of the time you just get out with, chicken dinner. That's it. You just pay your fees.
And actually, I looked at this one backwards from when I originally thought. I thought this was a short entry. This is actually the same concept of a long entry. Yep. So you want the same thing, right? This is the same kind of backwards setup. You're trending lower. You get the retest at your upper bound range that you want. You want to be short for a continuation here to where you meet that swing low previously. So if you'd entered short where the blue arrow is, and then you had your take profit at the red arrow, which is what I thought it was, that's exactly what I would have looked for.
Yeah.
But alas, I actually just read that wrong, and you were long there. So this was backwards also. So those are the areas you want to watch. And I only take those particularly to the first 30-minute range. I never try to go any further than that, really. Unless I have a strong conviction to do so. But that's not common. And I usually specifically notate that on my journals. So I think that in general, Laura, to sum it up, I think that we have a strategy issue here, and not that you took a bad trade. We're not taking a trade the way we think we want to be taking the trade, I think. Bruce, if you want to go back to the first image and show what you were saying, I'm going to read this.
Yeah, I would actually. That was a really good comment, Jack. I would totally agree with that. Like, there's kind of a strategy issue here.
Yeah.
And more kind of clarity on your strategy, and because there's actually, I know Jack is talking about the opening range strategy. And I also know that you're trading like Robert Rother's method in the VWAP and anchored VWAP. And there's a little bit of kind of confusion maybe between the two. And you got your checklist and all these things, but maybe a step back and one kind of thing at a time, because it's really not too clear. I mean, is this a VWAP strategy here, opening range strategy? I don't really get it. And then the anchored VWAP, I would wait. I think it's a really good comment that Jack made, because opening range is very different. Usually the anchored VWAP will be after the opening range. You want to see when the larger players are getting involved. What's making the market move, and then they're going to average it back to their anchored VWAP.
Yeah, and you want the anchored VWAP to be one of those extrema that the market is kind of like
Exactly.
where it kind of plants its flag in the sand, right?
Yeah, exactly.
Yeah. So, and when I was looking at this, and like I said, I got it backwards when I was looking at it from the colors and everything. The picture was a little grainy when I looked at it, but the retest at the structure broke VWAP. That's why I was thinking you were short there, is because you're looking at, the opening range above and you got your retest there. So I do think that this is a strategy or a combination of strategy issue that we just kind of need to nail down a little bit. But I would be looking at this trade short, similar to the other trade. And then DNT asked a question. We're looking for a potential reversal if the market is impulsed in an opposite direction. Not all the time. So for me specifically with the opening range, I dictate mine at 30 minutes. David dictates his at 1 minute.
1 minute.
So there's differences there. But we're looking for breaks in those levels, and either we take them aggressively if that's our trade for the day, like if we have that aggression that day for whatever, external reasons, or I'm looking for a break and a good retest from that time. And then from there, I'm looking to get in on the retest. And like David mentioned, I usually just put an ATM strategy order into Ninja, and it just, immediately takes it, puts me directly below my swing, and then I go from there. Now, I will adjust my stop in my ATM management from Ninja based on Bookmap. I go 3 ticks from my actual lowest transacted liquidity point on those breakouts. And that's one of the biggest advantages that I've taken from Bookmap, is just getting that stop tighter, because that's an area where I could reduce a little bit of that net loss when I do get something back in my face. And I found that it's really useful. So I do modify my ATM. But other than that, I'm looking for a break and a retest. If we've rejected or like we've just trended sideways, I will look for a pullback. And I see Laura's typing right now, so hopefully she got caught up a little bit.
She's got some comments while she types away. So
ahead,
in
buddy.
the chat, I've put in my Ninja ATMs, and it's the top one there, Stephen, in terms of, you can see they're really tight, 1.75 points as a stop. And the TPs, there's a variety of TPs. But those are my, if I say my deadly ones, no more than in terms of, it's that high risk, high return, taking trades at a time of day where it could go anywhere, and it gets me in. Worst case, I've got a small loss, but it snaps to break even. The B is my break even. They're quite simple ones. I also use Blackbird. I don't know if I've done many of those posts within. You Jack, you've seen my Blackbird ones in Spot Gamma. The ATM on Blackbird is a lot more sophisticated, because it's connected to a whole range of indicators.
It's specifically written to be sophisticated. Like, it's not. It's one of those tools that it's written to be exactly what it is. So the level of sophistication that they've added to the tool is really, really intense. It's great.
But these are worth. I think all Ninja users, Stephen, sort of build these out, sort of thing. But they're worth learning about and playing around. And I'm reiterating what you really say there, Jack. Very often these will go up on the chart, as you've seen some of the posts towards the close there today, and then I'll just drag them around myself because of what I'm seeing in Bookmap.
Yes, exactly. And that's one of the biggest things. I really replaced Footprint, which we're going to talk with Sherga in a little bit about it. I replaced Footprint with Bookmap. And honestly, like, one of the biggest things is literally getting those stops a little closer, following my trades a little bit closer. I've done a lot more of that in the last year and a half than I did the previous 2 years. It's mostly in futures, though. I will say that it's definitely more a futures thing that I really rely on it in. Equities with Bookmap, that quarter increment just stands out to me all the time. Like, I can just see the liquidity there so often. So I just rely on that. I don't really I don't min-max my stop. But, 3 cents on a AMD stock is not necessarily, 3 points on ES. So it's a bit different of a comparison. Laura, yes. So exactly right. So you've got the idea. You're just in the wrong direction, which is why we go over it, right? That's why it stood out to me. I was like, this doesn't seem right. Let's figure it out. Yeah. That's exactly right. Like you get the breakdown in the direction you want, you get the retest against you, then you want to be in the direction of your break, right? So if it's breaking down, you want to be short. If it's breaking out long, you want to be long, right? So, yep. Other than that, I really like it. And I do like taking some profit at that swing, wherever the initial impulse was that broke through the level. I like to take some profit there. So those are the areas that I would look at. And you can see that here, that would have worked out great, right? So like the initial breakdown is all the way at 18,755 here-ish, right? You get the pullback and then you get the continuation. You tag that level again, right? So it's a pretty continual thing that you can get into once you're in the direction. But you want to avoid chop. And looking long at 901, 902, like you didn't get a really good clean break of that opening range area. I'm not looking to get long right there because I didn't get a clean break. I want to see us move through the level with some volume and then pull back and retest as we get less aggressive buyers. A little bit of the ask steps up, pushes us back down, and then we get those buyers coming back in. That's what I want to see from an order flow standpoint, right? So that's how I take those levels, whether it's higher time frame with 30 minutes or 1 minute, and I orient them to the order flow. So definitely check which direction you want to be there and make sure you adjust your checklist for it, okay?
Your thoughts, yeah. I've just slipped into the chat. Sorry, Bruce. It's taking his charts. This is my 1 minute tick chart. Sorry,
Yeah.
my tick chart from today, 700 tick, M1, bit of a Picasso, iBath, etc., etc.
And you use 700, right?
Today I'm using 700. Yeah. I've got an indicator which is tick speedometer, and I run that every now and then, and it just sort of gives me a feel of whether I'm at 350, 250, or whatever. So at the moment I'm running 700. The horizontal green sawtooth line is the M1, the first minute ORB. This reiterates the point with here, Jack, doesn't it? So 1430 on here is the open. You can see that sawtooth, the blue and the red of the candles printing, and it's just retesting that 55, 57 level. So those are brilliant areas to get into.
Yep.
And again, Monday morning quarterback, it's easy then to see at sort of 10, 12 minutes in, we get up to that thick red line, which is the London VWAP, and it fails at that, and then it scoots back down. But that's another story. But that's how I use my ORB. Yeah. Great charting, Laura. Great charting.
Okay. So
you mentioned something on the first image, Bruce, that you wanted to look at.
Let's see. Oh no, I just again, I think it's same comment that you had kind of summed up earlier about a couple of different strategies. Like I know that she's trading off of the anchored VWAP or the VWAP, and I think especially with the anchored VWAP, wait for a bit until you see the strong move, and then you're anchoring from that swing. And then you look,
and you want the strong move with volume.
Exactly. Yeah.
So
that will be different. It may line up with the opening range trade, but most likely, well, in these examples, it certainly does not.
Yeah. So if you're looking at VWAP in general, just looking at this overview, nothing about this says I want to be long or short. Because if you look at it just from this 35-minute time frame, you broke out above hard with decent volume for the open, then you fell back hard, right? Then you broke above VWAP again, then you broke back down, then you broke above VWAP, and then you broke back down. You have really no good confluence 35 minutes in that VWAP has stabilized and is, that kind of anchor that you want for a VWAP strategy. In this type of strategy, it seems like you want more to be fading the extreme as opposed to like trading in the direction. Like you want to trade towards VWAP, not necessarily trade long or short from VWAP, because you've oscillated too much at this point. Like VWAP to me right here, I'm not seeing it. Like this is just, we're going to oscillate around VWAP all day is what I see or at least for the next, short term. So be aware of that. Like VWAP's great, but know when it doesn't break or when it's not going for you. Like when you break through it multiple times, get some good consolidation, get a good direction before you start entering on a VWAP long or short with VWAP as your confluence.
Yeah. And then just another thing in here that might be helpful for you, Laura, if when these strategies start to align. Start to match, like both David and Jack had talked about, like, then I look for my kind of higher time frame move to my line or whatever it is that they're looking at. Then they're looking at the order and matching those things up. And if you don't see it, just stay out. Don't take the trade. Like this trade here is a move into hold on, sorry about that. You're moving right into an area right here where you would kind of anticipate a pullback and then the potential move for it to go back down.
So when I thought that was a short entry right there, because
that's what
mixed
you
it up.
had said.
Yeah, I was like, that's going to be a little bit of an aggressive short, is what I was thinking. But I still like it because there's low buy volume, right? Like you had the strong sell volume, and then the buy volume is just not there relative to the sell volume, right? So if that peters out, which we see it do, that sell volume is going to come back in and push the price lower. Like, so when I was looking at it from the short, that's exactly what I was looking at, Bruce. Yeah, exactly right.
And start to look at some of those structural areas and order flow around them as well. I mean, you see it here. Look at this line going across. I mean, it's beautiful. Here breaks through, retests the other side. Now it breaks through this side, and you probably got a nice move here. But anyway, just maybe also consider lining some of those things up with your strategies.
I also think that with NQ, you need to be a little wider on your chart. It can go 5 points pretty quickly. So
that's true.
I think that it's great when you consolidate your screenshot to share it with us, but like your own personal journal screenshots or your secondary screenshots when you have multiple of them, I really want to see your price expand wider. I don't want to see just 5 point increments. I want to see like 2 or 3, right? Like especially where your entries are. I think that you're going to see a lot there over time as you start journaling those and start relating to like when you want to get to these levels, what are you looking at, right? And then as you start documenting it, you'll start seeing it more and more live. I think that that's going to help a lot. And then, Bruce, do Academy members have TraderMap Pro still? I know we did at one point for the juniors.
No, I think it. I don't think so. We released a new TraderMap Pro, and we released the free TraderMap Lite.
I really, really encourage people to take a significant interest in those. If you're not sure what they are, I'm sure Bruce has shown a couple of times. It's going to clean up so much of this noise. I keep a TraderMap chart of ES and NQ off to the side. It's not the one I look at 24/7, but it is the one I do look at often. I tab to it. That's where I'm zooming and stuff. That's where I want to see all my different levels of liquidity. Because it really does clean up a lot of this noise, and I think that it is useful. Yeah. So it's something I would recommend traders use. Yeah, you might have to do a second screenshot. Slow down. You're absolutely right. So I do all my trades through a different platform, so like that's never really going to be an issue for me anyway. I'm never going to benefit from it. But yeah, from learning and from those aspects, it might be one of those where you need to have a second chart for it. So
okay,
that's all I had for Laura.
Okay. On.
Yeah. Perfect.
I think I've got Veilfan next, but I want to scroll down. Is Shiraga here? Is he in the chat?
Yeah, I think he's here.
He is. Good. Okay, so let's go to Shiraga if you don't mind, or Shiraga. I'm not sure which one it is. So I could have sat here and I could have gone through a bunch of what's going on here. But what I want to do is I want Share to take a second here and explain what we're seeing in this chart here from a footprint perspective, because I really do like it. This is a great setup, and it's something that you can also not necessarily need footprint for, and you can do with just Bookmap natively. So, Sher, if you could tell us what's going on here and kind of what your setup is, and lead through it, and then I'll jump in when I have something to say, buddy. On you, if you don't mind. Can you hear us?
Yeah, he's there. His mic is there.
There we go. I see it's unmuted now.
Hello, do you hear me?
Yes.
Yes, I hear you, friend. Thank you.
Yeah, hello everyone. So yeah, this is one of my favorite strategy. It's called top imbalance. So for people who didn't watch my video where I am explaining what I'm looking for, so I'm going to repeat it. So basically, when price is falling, it forms stacked imbalance areas. So on the picture in the left bottom corner, you see a red area. It's stacked imbalance area. Yeah, it's over here. So this line is stacked imbalance area. So basically, for people who don't know what it is, so basically it's area where we have, let's say, my preference is 200% more buyers than sellers. Sellers than buyers. So this area marks spots on the chart where I have 200% more sellers. Yeah. So I have idea that it has potential to be resistant. Let's say if price comes back to the same area. It doesn't mean that this area is going to be resistant, but what I want to see before price comes back to that area, I want to see aggressive selling. Yeah, so that's my idea. And this is, I have nuances what I want to see before, price comes to that area. So yeah, so in the picture in the Bookmap, you see the main indicators which I'm using is volume bubbles, green and red bubbles. Also, I have absorption indicator, which is really important. Yeah. Also, I have a sweep indicator.
Yep.
For this strategy, I'm using footprint chart. Yeah, it is very important. So basically, I have 4 rows in the bottom. You see. So yeah, if you see footprint chart in the bottom,
directly below the pink area. Yeah. If you want to zoom in there, Bruce.
Yeah, so I want to explain what I see and why I'm using what I'm using. So the top line marks max delta.
The 37 next to the pink arrow.
Yeah, it's max delta. In the above that I have delta, and below that I have min delta. So yeah, it's max delta. In the middle, let's say, yeah, over here I have delta, and below that I have min delta. I want to so this is very important. I see many people are using only deltas, but yeah, so to understand order flow is very difficult. If you It's not my preference. It's just how I understand order flow. When I start trading, I was using time and sales, but to read what is happening in the market from time and sales, it's very difficult. So for people who have watched time and sales, you know that at the time it's someone is buying, someone is selling, and in the beginning it's really difficult to understand. So that's why I'm using footprint chart, and I use 30-second footprint chart. So basically, I want to see aggressive shifting, from buying to selling. So as you can see, at the top, when price came to that level, when before stacked imbalance area, yeah. So as you can see, I have huge shift from buy to sell volume. And how do I know? Yeah. So first of all, I have, of course, my favorite sell volume bubble, sell volume spike indicator. Yeah, this is really great. How do I know that I have aggressive selling? And what is really important, I want to see minimum delta in the footprint chart below minus 400. In this picture, I have, as I remember, 500 minus.
Yep.
Yeah, so this is very important. And what is really important for the last few days, we had a really aggressive selling in the beginning of the market, and after that we have a really bullish trend. So as I mentioned before, I'm using absorption indicator. So what is really important in this setup, when I see aggressive selling, I don't want to see limit buy orders over here, because I want to explain you how do I understand deltas. So let's say when price came to that level, let's say price reached below stacked imbalance area and aggressive selling appeared. So let's say somebody put a limit buy order. So somebody, let's say, buying somebody, let's say, buying somebody is buying 500 lots. So you basically will get a huge sell delta, but somebody is buying, so
there is a counterparty to the trade. Yep.
Yeah, but I don't want to see buying at all. I want to price to fall. Just basically, I don't want to see limit orders over here. So for, let's say, I will give you an example. Last 2 days, I saw when price went to this stacked imbalance area. Before price reached them, I saw aggressive selling. But what is really important, I saw limits buy orders. So I had huge deltas, but price was going up all day. No matter how people was selling or somebody was selling, there was limit orders. So for this setup, I don't want to see limit buy orders when huge sell deltas are forming. So this is really, really important. So as you can see, so I have sell volume delta, sell volume spike, footprint delta above, below 500, and this is really important. So I want to tell that from my experience, I was stopped so many times because I placed my stop limit orders in the wrong place. As you can see, my stop order is above stacked imbalance area, because this is so important, because I had stopped out so many times, and I was wondering what is wrong, what I'm doing wrong, because this is basically my textbook trade. So for people who are using footprint charts, I think stacked imbalance areas is absolutely very crucial, but you have to combine everything. You have to combine huge limit orders.
There's a lot of information that you have to matriculate into it all at one time.
Yes, and why I'm using deltas, footprint deltas on the candlestick, on the 30-second candlesticks. So basically, when I have huge selling, I don't want to see in the next 30-second candle, I don't want to see, green deltas. I want to see. So it's really difficult to explain.
No, it's okay. It's okay.
Yeah,
so
but
one of the things that I'll just kind of touch on some stuff here. So really what you're looking at is you're looking at the active volume, right? Like the people who are aggressively entering the market, whether it's to the buy side or the sell side, because if you get that aggressive sell volume, you don't want to see any of that aggressive buy volume to come in and counter it, right? That's what you're saying? You want to see light limit buying?
I can see aggressive buying, as you can see in the right side of the picture.
Once you get going, yeah.
Yeah, but I don't want to see sellers being absorbed by limit orders. What I mean, that this is really important, because you basically you will get a huge sell deltas, but it hitting liquidity, it hitting liquidity, and
yeah, you don't want to get absorbed.
Yeah, you don't want to get absorbed. You want to just price sellers to be just push price aggressively. Yeah.
In the screenshot here, we can see there's very, very small volume orbs from basically where the right pink arrow is until several minutes have passed, where there's really just like no true volume, which is kind of like what you want to see, right? Like you don't want to see any of those things, because that way it'd be fighting against where your other absorption area is. And then you mentioned something that's really, really crucial that I found with stacked imbalances myself, when you're looking at them from a different time frame and stuff, is you want your stop to be incorporating that stacked imbalance, because you're looking at the order flow imbalance over a couple of points, not just a hard and fast level. So like what's really good about it is, you mentioned, you can get a really good trending move. You can get exactly into where a reversal happens, or where you're going long or you're going short. In this particular case, it looks like a really great setup to go short. But if you have that stop too close, because you're looking at just today's volume, you're not necessarily looking at previous liquidity areas, it can hurt you, right? And that's kind of what you mentioned there with the having your stop a little too tight.
Not too tight, it was in the wrong place, because
it was too close to price, right?
It was in the wrong place. It has to be above stacked imbalance area. So let's say
we're saying the same thing.
Yeah. So the
that
next
was really great here, though. Go ahead.
The next thing, what I'm doing and what I learned in this week, sweep indicator. It is sweep indicator stacked with huge orders in time and sales. As you can see in the right corner, I have time and sales. So I have my preference above 150 lots. So I want to see, I'm combining sweep indicator with huge orders in the time and sales. So let's say I have 150 buyers, aggressive, buy 150. So I want to see if they are pushing price, higher. And this is very important. And so as you can see, we don't have any huge buying in the time and sales, and also we don't have huge buy sweeps in that area. So this is all this. You have to combine everything when you're looking.
And also your chart volume profile there too. You can see that you definitely have overhead, more volume pushing price lower consistently, right? In the chart volume profile there in the right column. So that's just another added confluence with that order flow.
Yeah, and as you can see, and I want to mention one thing.
But your footprint also tells you that, for those that aren't necessarily used to footprint, like you get this kind of information as well.
Yeah, but I want to mention one thing which is really important. So if you look to time and sales, so you see very different order sizes. Let's say from 1 to 100. And I'm using market pulse absolute deltas. As you can see, these deltas have variations, from, let's say, from the 0 in ES futures, it can be to 2 millions. So in this setup, when price, so I want to give you advice, or when you're going to replay your trades, look at the market pulse absolute deltas.
Yeah.
So pay attention. Let's say you have pay attention to the deltas when you have more than 500 or 400. So you will notice that sometimes deltas are forming with very low absolute deltas, in the market pulse, and sometimes you will get huge absolute deltas. And what I'm looking for when I looking for short, especially in this setup, so I want to see absolute delta minus more than 7,500. So
Okay.
750, yeah. So this is very important because you want to see size hitting the order book, and that's how I know
you want to see a directional lean in the absolute delta.
Hey guys, if we can sum up, and we've been going for a while on this one, maybe if we can kind of sum it up in the next few minutes or so. And David, also, if you have any comments too.
Sure.
So I mean, I really like you're going through very methodically your setup. You've got your checklist and you know what you're looking for. And then I really like that you're going over it again and again. You have your higher time frame level up here, which is fantastic. And then now you're looking for, I mean, basically you're using kind of the footprint and the deltas as order flow and the volume dots here.
Yeah, that's exactly it.
So it's just another way of visualizing it, but you're looking at numbers and you like the numbers. This is what floats your boat. Fantastic. That can give you a lot of confirmation. But
these trades can set up for long trending reversals because they show like just a solid wall you're running into. So you can get some really good trend trades out of it. Yeah. So it's really good from that concept. It's also a really strong risk trade too, where your stop is.
So, I want to mention that I'm a physician. I worked in many years in intensive care unit. Right now, I'm working in emergency department. So all the time I see numbers, and if you talk about human health and about intensive care unit job, so you see all the time you see numbers, and that's my personality when I looking at in the order flow. I want to see numbers because it's very objective for me.
Yeah, and there's some people like that. I traded those numbers for a long time. One of the things that drew me was the fact that I could now just visualize it a little bit better, because shapes I wanted so much more than numbers for years, right? So that's what's great, right? Is like you can really fit however you want to, and you've got several different ways of seeing similar things. So I thought it was a really great example. David, had you seen this similar kind of setup? We saw one of these earlier today, right at that 5600 level, 5605, I think.
We did, yeah. No, it's a lovely bit of charting. So well done on that, and it's nice to see the footprint. I echo really what Bruce, you've all said. I think in some of the previous weeks, Jack, we've shown some of the sort of different footprint charts we're using, and I echo and align with seeing those numbers. And if you look at that sell down, sort of at let's think that was 3 o'clock, wasn't it, Jack, when we had that sort of 20 point scoop down. You look at the footprint chart on that, and it is screaming to join in. I know the Bookmap chart says the same thing as well.
It was incredibly imbalanced for the buy side.
It just there's any numbers on the left of the candles. There's nothing on the right. So I think we're going down. So love it.
One of the big things to worry about is just the liquidity, right? So days like today when there's low volume, you just got to be wary of those things. But that's one of the best things about Bookmap is you can see the volume throughout the day, and you can really equate it. Like one of the things that I want to take home from this is that he's looking at the directional volume, and he's looking that he doesn't have any counter pressure against him. That's just going to cause absorption, right? So those are some of the key takeaways here. That was really all I had for share. I really appreciate it, though. If you could add some of your market pool stuff to your trades when you get it, just some screenshots and stuff, I'm sure people would love to see exactly what you're talking about there. I get a lot of questions about footprint, so it's great to have an example to go off of. I really appreciate it.
Right, excellent. Yeah, thank you, Shurega. Let's see, Jack. I think that's.
I got Vail found.
Oh yeah, that's right. Yeah.
Vail will be quick.
Oh, I'm sorry. You know what, guys? If I just want to take a quick little break here. I forgot to show something earlier, and just a little bit of a breather here as well. I thought maybe it's a good kind of interlude. We just released it in the digest today. we now offer this sim demo account here, and you can you get like $100,000, fictitious money. But the beauty of this here, and you'll have to trade in the live mode down here. It has to be. So you're going to be routing your trades to a real demo account on our Bookmap server. It's not just within the app here. The beauty of this is the orders are sent. They're routed. They're also you have a certain amount of liquidity available to your account, and you'll get margin calls. If you blow it out, we'll give you another one. But it's a great testing ground for forward testing, and then record it and then replay it. Shariga had talked about replay. Use it and go back and replay it, and then try to build your account out. The beauty here is it also works in only CME, I believe, right now. I'm not sure about that actually, but anyway, the beauty of this is it also works with the journal. So when you go to your let's see, you'll need to just have the trading statistics up, and that is where here, trading statistics here, and then sync it with your web journal here, and then that'll open it up here, and then you'll get all the data in here. It'll say demo account here, and it's under this one here, under your simulated demo account. All right, so I'm still talking with some of the developers about, and we're still making changes in here to the demo account, because like this is really fictitious stuff. I was testing it, guys, so please do not look at the equity curve, or there's going to be a lack of an equity curve next time, believe me. So like we're trying to break it basically and test it in here. So you'll see it say demo next to it here, and you can look at just your demo account if you want, or you can look at all of your accounts, whatever. So really nice new feature in here, and go play with it, and learn, get better, and you're going to be way further down the road. And probably some of these Bookmap Academy meetings will be looking at journals pretty soon. You'll be able to share your journal with your coach. Not only will we be looking at trades, we'll be looking at your average loss here is bigger than your average winner. Not good, anyway, lots of stuff to take a look at in here. All right.
Very good. Exciting, Bruce. Exciting.
Yeah. So
where's that link at to sign up for the demos? Is there a link for that?
You've already got it. Okay. And it's all you have to do.
Just connect to it from the connection?
Yeah, and let me show you the connection in here. It's already here under videos, and you'll see it right here, 24/7 simulator.
Okay.
All right.
Thanks.
Yep. It's really simple to connect to. You will need to use the trading simulator add-on in here, and you need to use the cross trading feature in here. But it's shown in the video. You guys can connect to it right now. Well, maybe not for futures right now. You have to wait about 45 minutes to take a trade.
How dare they turn it off?
I know. All right. So enough said. Let's move on to Valefan. And let's see.
So this one's going to be pretty easy. There's one thing I want to highlight here. There's a couple of things, but in general, Valefan and I had talked about this when he actually posted it initially. We had talked about it. And let's just go directly to the bookmap there. And it's the reduced size partial there. So knowing Valefan and just, helping him over the last few months as he's, just continued to grow constantly. What he likes to do is he likes pivot points, but he wanted to get some more of that context there, right? And the one thing that I pointed out to him when he took this trade is I didn't like the reduced size partial there. And he gave me an actually perfect answer that completely ignored that critique. Valefan, do you remember what that was, buddy?
It had gotten close to my stop.
Yeah, and you were in a trial account, if I remember correctly, right?
I was using options.
Yeah. Okay. I remember that.
Yeah.
Yeah. So, but other than that, this was one of the best kind of trades that we've been looking at with him. Why are we looking at a partial at that liquidity there that you've got highlighted? Can you tell me what you're looking at here?
That's where we started with like the spot gamma and hedge wall
Yeah.
telling me how that's point of volatility.
Yep. So you were looking for a potential interaction there, right? So you picked the level and then you were looking for the interaction there. And why did you get out in your stop there?
What's the 50 SMA?
Yeah. Yep. So one of the things that he's done over the course of several weeks is he started to integrate different tools. Because one of the ones that he was having issues with is he's getting into a trade and then he's getting stopped out because he's not taking profit enough. So one of the things that we talked about is looking at some of these inter levels where there is liquidity and finding why there's liquidity there. And one of the reasons that we find liquidity there at 172.5 is because that is the hedge wall, and we expect some sort of interaction there. And that's one of the things that we've been talking about a little bit. So he took what would have been a full loser plus theta value and got multiple partials out of it and ended up with a net winner.
Perfect.
I really liked this, Veilfon. You integrated a tool slowly and you did it methodically. The only thing I didn't like was just the panic exit at the reduction of size there. I would have liked to have a better reason, like if it comes back above that swing to the left where you took your previous partial, I would have liked to have a rejection there. That's where I would have probably reduced size. Other than that, this is great use of a new tool, man. Really, really good job integrating something that you are learning, right? So
I posted another one for you today too to look at. It was a gamma strike and call all in the same spot that I, instead of going and taking my entry at R3, I let it come up another 70 cents into that area, in that whole dollar area. And I got a great entry and I didn't get filled. And then I waited for it to come back and then I didn't get much out of the trade, but I was happy that I was looking at that and I saw what I wanted to see. And so I tried the trade.
Yeah, exactly. And that's something that's really, really important to see. One of the things that I really, really like about this is, one, we're looking at equities, and something that I've mentioned quite often with Bookmap and equities is that $0.25 increment level. You see a lot of this liquidity there. Where he gets that hedge wall interaction and there's strong volume that breaks through, that's a $0.25 increment, right? The hedge wall lined up with a really good key gamma strike. He had an inference there. Where is the swing low after that? 172.25, right? So again, we can see that liquidity sitting there in the Bookmap. We can see when we get the rejection. It's really, really great to be able to take partial trades with it in equities because you can use good capital allocation. So really great use here. I was really, really happy with this one. This is one of my favorite ones that you've done since you've integrated some of the new tools. So
awesome.
Really
thank you. Yeah. And your help with that has been awesome too. Just slowly understanding it, just using it every day and matching it up. Just
you're the one making the good trades. I'm just sitting here reviewing them, right? So
Monday morning.
At the end of the day, you got to press the buy and the sell button. You're doing well, Ed. So no, it's great to see. I really like to see some of that. One of the things that I was talking to David about before, and I know we got to go quickly here, make sure that you're not getting just over to one platform. Whenever we introduce a new tool, a lot of times it doesn't matter if it's a tool within Bookmap or a tool external, right? You're a little too focused on the new shiny, right? So make sure you're still watching for your order flow events. Make sure you're seeing what you want to see, right? Like you got a really good impulse down, you got consolidation at your level where you're looking for an entry to be short. That's a great entry to be short, right? Because you want to see the break, you want to see the hold, the level in an equity. You get the continuation move. Again, great area to take your partial. And then you get the move to your level. One of the things I noted in your journal here is I would have liked to see a partial above the liquidity there, because you don't always get that sweet spot where it pushes through. And I don't know if necessarily like the arrow is just off, right? I would
Maybe
have liked
split
to,
them up,
yeah, I would
split
have
up
liked
a
to see.
partial.
Yeah, it depends on how many contracts. If you're running 10, where that partial is right there at that liquidity, the hedge wall, I would have liked to see that 172.52, 53.
Okay.
Just front run it a little bit. You're giving up 3 cents, right? But you're secure there. Because if you think of where your partial is right here, order flow wise, in order to get filled, everybody had to come through everybody else to get to you, right? And I never want to be in the back of the line, right? Like if I can get my profit a little bit before everybody else, I kind of want to front run it. And that's kind of my perspective on the whole thing. But again, at the end of the day, it's your buy and sell orders, right? So that's something that I would have looked for there. I really like to see the interaction with that liquidity following that. If we'd have reversed, so let's say you would have had your stop or your take partial at 172.53, it gets to your partial, but we never get that push through. That tells you something all by itself, right? That's a liquidity rejection. And that tells you to get the hell out of the trade, really, is what that
It was a nice one on Apple today. I posted that one up too.
Yeah, similar
Beautiful,
concept.
beautiful reversal pattern.
Yeah.
I was like, wow, why wasn't I watching at that time?
You can't watch them all. That's
And
the trouble, isn't it?
Oh my
I
God.
know I beat the horse today with the order flow stuff, but really, like, there is some great order flow in the last couple of days where you could just pay attention to the things in the market and decide to take a directional bias and just be long or short the market for a significant period of time. One of the things that I focused on this morning was very similar to that, right? We had that huge sell-off yesterday, but if anybody was watching tech, it was holding strong the entire day. There was no volume. So it just felt like everything else in the market was giving it up. And tech was still positive almost an hour later in the market when it opened. And we got that strong reversal, right? Like, so paying attention to the order flow and the correlation in the markets, and you can get some really good opportunities. So I really
Great.
appreciate this. This was a
Absolutely.
great setup here. I look forward to seeing more of those, buddy.
Lovely chart. Lovely
Awesome.
chart. Well done, sir.
That was the main things that I wanted to cover for the three of them. Yeah.
David, any comments?
Not a great deal, thanks, Bruce. Obviously, we talk about options and how the effect that they have on stocks and futures. We can see the building of the liquidity from, say, 11.05, 11.10. So that level, is building up. It's got the attention and so forth. The entry's clean, which is good. There's some, I'm not exactly sure whether these are sort of VWAPs or other things on there, but it's all going down. You get on board.
His
perfect.
purple descending line is a VWAP line.
Okay, yeah. So you trading with a trend, fantastic, love it. Yeah.
And then his purple actual line is a VPOC.
And then we've got something really bloody solid at 172, whatever level that is. But,
That's what I want to get to.
It does, but I mean, to be fair, this is going to happen a lot, right? Like you're going to see equities do this when the market is just kind of doing its own thing, but you're in a 0 DTE, so you're already paying for theta. So at this point, like you got to get the directional move right. If you get the directional move right, all sins are forgiven, right? So you're hit or miss with your capital allocation here, but
definitely. And I appreciate the options. Some days, option levels on the chart. Some days work, and other days they don't. Today in the close, we had two key option levels, and it just head bound against that. Maybe 3 or 4 times, Jack, looking back on those charts, and we didn't get it. I look
at it, it's 5-ish times.
5 times, it just didn't get through it.
Nope.
Now, sure, it can be time of day, as you talked about. It could be lack of liquidity. It may have not been the options levels, but often it is the option levels.
Yeah, so it felt like the market makers were positioned above, and we had just that higher overhead liquidity. So there's more sellers just passively in the book as opposed to buyers. So the active buyers are just running into more like just overhead absorption. Right?
And L2 and L3 were fairly close, or are fairly close, aren't they? Up there. So,
and it felt like a lot of people were laying into those positions, really getting that 5,600 close, I think is what we got.
Mm-hmm.
Yeah, 5,600. Yeah. So, and we saw the liquidity there all afternoon.
Yeah.
So, yeah, the biggest thing is to have those inferences of where the level is, and this goes for higher time frames. It goes for options positions. It goes for any tool, right?
It does.
Have an idea of what you expect when price moves to a level, because that can influence your trade, right? Like, you're the master of your own trade. You can get in and out of a trade whenever you want, and you need to pay attention to those key levels. So
that's classic here, where the hedge wall liquidity is building up. I popped in the chat, Bruce, Apple, that Velfan was talking about, I think, at the early start. And you can
wow,
see
look
how...
at that call buying. Holy cow.
Oh,
I was sure they got that pretty.
Yep. Early doors, 30 minutes in, the options are going north before the price has. You've got a decent heads up that things may be turning around. Not always. And
that's some vol selling too with puts. So like, there are people that are wanting to be long, and we've seen a lot of that kind of sentiment with regards to Apple and some of these assets. They're moving to it for some of that more security, right? So kind of keeping an eye on what the market's doing as a whole. You know, like I mentioned.
Have you been reading Zero Hedge there, Jack? Because that's what he's been talking about.
I mean, I've been reading Bloomberg. I've been reading Bank of America notes, and they're saying the same concepts that the retail fin Twitters are saying, right? So chicken or egg, I don't know who's right, but in the end, we're seeing the action, right? And we're seeing a lot of stability on some of these. When they're directional, right? So take advantage of what you can and take profits.
And David, sorry.
No, go ahead, buddy.
Yes, sir. Do.
David, I've been watching the London close these last couple weeks really close, so we still need to get together on that. I especially when it lines up with the level. I've had some really nice trades watching going into the London close, and it's right at one of my can levels. I'll just wait to get the signal, and it'll just go sometimes. It's this is great.
Yesterday, I think we were all sort of posting in the Academy room. 30 minutes out to that London close yesterday, we were talking at the charts earlier on where it had gone down to, getting just above a couple of the gamma levels and so forth, and we'd got down to 54.20 before it did a 180 reversal, and that's within that London close
their power
zone.
hour.
That power, it's all within that, and you had two key massive option levels. You had the time of day. We'd had that sort of fake selling down where not much had been actually selling, but the price had fallen. What are you on about, David?
So I hate the trapped sellers, trapped buyers kind of sentiment, but I think that today was very much similar to that, because if you look after the London close, how strongly our move was, and then you see our move today, and then once it stalled a little bit, that initial stall we got at roughly 55.70, I want to say, we got a lot more of that really heavy downside liquidity, and it really felt like that manifestation. It felt like that manifestation of some of that trapped buyer, trapped seller kind of mentality there. So I don't necessarily subscribe to that, but it definitely felt like it. It felt like there was some directional shorting to kind of unwind some of those positions, right? When in the lack of volume, they realized that, hey, we can move this pretty heavily and then adjust our deltas and stuff. So it definitely felt like there wasn't going to be that continuation today, which allowed me to get long rather. But yeah, the London close has been very crazy the last couple of days.
It has, and I know you and I often, we spar on it, don't we, in Discord. And it was another ORB session. I popped that in the chat. Sorry, Bruce, David and his bloody charts.
Do we have who else do we have today?
I've got Alan.
And
I've got Slowdown.
Let's get Slowdown.
So just a quick question for you, Valley fan, on your entry and criteria and checklist. If you can maybe discuss a little bit about that. I don't really.
I didn't include those. Yeah, those are in his image or in his post. But yeah, sorry, I didn't include those.
Didn't put my R3 level there. R3 was right there.
Okay.
I just put the Bookmap image. Yeah.
And it just, all I could do was wick through, and I was like, okay, I'll take this. And then it kind of broke under, tested again, and then really started to go down.
Yeah, and there was no volume.
Against R3.
Yeah, there was no buy volume really, and and like your level just held. That's why I didn't necessarily include it. I probably should have like just mentioned it, but yeah, it was a short setup on a key level from his pivot points.
Okay.
I really like the bookmap image more than the other image above there, or his checklist that he puts in his text there. So I thought it was a great image.
Let's move on to.
Thanks, guys.
Yeah,
I appreciate
Okay,
it.
no, we'll definitely speak soon. My bad.
I
my bad.
like the equities working, man. I like what you're doing. Take your time.
I'm the only
slow.
one.
Yeah, no.
You are.
Caesar's doing great too. We talked to him earlier, so.
Did he get back more into equities? Okay, I'll have to talk to him then.
I think he was futures today or the other day,
Okay.
but it's great to see. It's great to see more people. So
Awesome. Thanks, guys.
Yep.
Take care.
Yep.
Take care. Good chatting. Thank you. Right, Alan then. Alan, sir, are you going to grab the mic and talk us through? I did enjoy the videos earlier on, Alan, where you were partying away.
Yeah, I'll show the videos. That's my surprise of the day.
It is.
So
Take us through the squeeze, please. Also from yesterday. Yeah.
from yesterday, I mean, this is a pretty basic squeeze. You see the large selling, and it's usually better when the selling can go all the way to the bottom, or at least where the volume bars are. So it's the typical stuff that I always do. First I'll go with the checklist in order. So you wait for the aggressive sellers, to get to the bottom of the range. That's for later. You went to dessert. I'm still you.
Oh, it's still on the escargots.
And then the usual thing. Some people making a mistake. They might jump too quick on the trigger for a short squeeze. Sometimes you'll get a bounce back up.
Waking up that, Alan, or is it my end? I'm not sure, Bruce.
I don't know. Anyone else?
What was that? Sorry.
Alan's coming in and out a little bit, or is it my end?
Do you hear me? Or
Yeah, I can hear you.
Perfect.
You're a little choppy, Alan, but we can hear you.
Let's see again. I'm gonna put on my headphones if I see if it helps. You hear me?
Yep.
Yeah.
All good.
Better? All right. So what I was saying is that a lot of people will, you see, a move down and then see a short squeeze. And usually, there's a head cat bounce. So they say. I don't know where that saying came from. And then the market will continue down. So it's very important. I put in which step was it? And step 4.
Okay. Nicely numbered.
Buying EF, and that's why I put the arrow right to the green. Like for the, you have to wait for the I say the same thing every week. You have to wait for enough green bubbles, and not try and like people, the typical retail trader. My mother, they try and like get it at the absolute low, at 52-week low, and then sell it at the 52-week high, which is like, and a lot of retail traders, are stupid and do that, and that's they end up not making it. It's like you have it's okay, so fine. You didn't get in at the first green bubbles. If you get in a little further up, at least you have more security. That it's going up. And another thing that I saw is that the POC was above it.
Yep.
And so if the POC of the view app, is above where I'm going, then I'm looking, north for a bullish move. And what else? And then if you saw where I took my profit, I took my profit right where the selling started. Well, yeah, right almost across to the left where the selling started. If you see, I got in over there, and then I got the purple. And if you go across, it's not exactly, but it's in the area where the selling started.
Gotcha.
I'm a little confused, Alan. This is your selling here, right? And then you bought it back here, right?
Yeah, it's a short. Yeah.
Yeah.
No, shorts. No. Yeah. No.
But I'm a little confused. You said you're entering long here.
It's a red.
I bought it there, and I got out of the purple.
Okay. I guess I don't see the buy triangle in
Right.
here. But
That I circled it to the right of your pencil.
this
That looks a bit after the purple,
that looks like
doesn't
it's
it?
after this though.
Yeah. Okay. It's an ORB setup anyway, I think, Alan. It's really the theme we've had sort of today. We were talking about with Jack and Laura and so forth in terms of market opens 9:30, the price zigs around, and you're just trying to get on one of the ends when it's been tested, yeah?
Yeah. And the basic, yeah, exactly. So I want to cut the little short. If anyone has any questions, but it's the usual, stuff that I do. But I know I mentioned a few weeks ago to everyone about the speaker and lighting up. So if Bruce, if you can go to the Bookmap Academy page, please. Turn on to.
This is the light and sound market pulse you've got.
Yeah. It's a Bookmap.
Yeah. And what do you want to see, Alan?
You can maximize the screen. So time did I put it at? Like after three, you'll see. Keep going up.
Oh, here.
Okay, there. So the first one, there. So that one. So if you put the sound on.
Damn, I'm at Nikki Beach
I don't know
again.
if you guys can hear that in Discord, but you go into here and watch it. This is hilarious. He's got.
Look at how fast the lights are going. That's like Marco Polo's like on steroids. And then I don't know if you guys can hear it, but like you see look at how fast it goes, and then.
That's awesome, Alan. You want to patent that, whatever. You want to trademark that.
And I want you guys to see the middle one. Like it says it, so to prove this doesn't happen now. Nothing's happening. The aggressors went down, and she's just going. It's like nothing. It's just going. There's no marker pulse. Dan suggested I put the widget behind it, but it was already too late. I made it the market pulse, and then I just wanted to show again another example of just how it came, and look how fast, like because I think it's great because the confluence and the visual of the eye and like that massive way it's turning.
So you could have this like in the bathroom or something. You're taking a shower or something.
Yeah.
And like
Exactly.
market pulse. I gotta go make a trade.
Yeah. Yeah. You can put anywhere in your house, whatever. You'll hear it, and like I don't know. I'm trying to show everyone. I don't know a lot of people at 540 aren't here, but I want to show it as much as possible because it's kind of like Viagra. It was supposed to be a heart medicine, and we know that it was an accident. It ended up something else. So that's how I came across this.
You need it in the marketplace. You got to put this in the marketplace, Alan, as a link for you. You got to.
Stuff.
Yeah,
it's really wherever I show, it's really great because I like the visual and the sound, and it just works like a team, and it's like one on one. You what's it called? Synergy.
Yeah. If you can fit that into a Stream Deck or something with your shortcut keys, you'd be good to go.
Big time.
Yeah, I'll try and make it better. Work on more like on a heat map. But this is my first introduction. And I'm gonna keep banging. What's the word? Keep banging the pot, whatever is in it, because
the drum or something. So
the drum. It's just that it's so useful, and ever since I saw it, I'm not a millionaire, but and I still get trades wrong, but that has never been wrong. There's always, I guess you have to just if you guys watch it and the sound when you're done after this, you'll see what I'm talking about.
Yeah. So on this trade here, Alan, lovely seeing the checklist, lovely seeing the numbers because it's easy to read through. I agree with Bruce. We're a little unsure about entries and exits, but let's say that aside, the tip would be to start thinking of add-in lines. Easy to say, but just popping some lines on that opening range. You've heard the levels I talk about, the first minute, the opening print, whatever. But that can give you some sort of bumper bars and boundaries, apart from visualizing the chart yourself in terms of trying to play those opening ranges.
Yeah, I also put the journal posting. You just go back to the regular.
Mm-hmm.
Go back to Discord. The Discord screen.
Mm-hmm. Yeah.
You see it? The main screen.
Oh yeah. Hold on. Just a minute. I'm getting there.
Multitasking, Alan.
Yeah, I'm not a gamer. Like looks like
Thank you,
you're
Alan.
it looks like you're quite the gamer or something here.
It's the Roblox Alan.
Not me. I will get eaten alive by these kids. No way.
Fortnite. Forthright. No.
So that's not it. Hold on a minute. Here we go. Okay. So you put in the
Above the trader.
Okay.
Yeah. There.
Well,
There's
Bruce finds that.
You just pass the go.
Okay.
Here?
Go above the trade. You see there's the link? Yeah. Underneath my name, the journal.
Okay. Great. Look at this. Okay. There you go.
So I couldn't narrow it. I was trying to narrow it down to one trade, whatever, but I figured I don't know. This is not all that money's there. Some of it is sim, obviously, but
so you're playing around with that demo account right here. Excellent.
Yeah.
Yeah. Great stuff, Alan. So
and if you look at the MFE and MAE, it's pretty good ratio, 32-7.
Yeah. This
I
is
think
great.
those are the same. I'm trying. Is it possible to I could take it out, but it doesn't give me an option copy and to paste.
This is the same actual. You guys can see this is another benefit of this demo account. Mm-hmm. Is the it takes out also your commissions. Yeah. Because we didn't have that before. So it's much more realistic. So anyway, you can see that the main trading journal here it's the same trade, and then you can see that the simulated demo trade is here. We are I think the developer wanted it to make one or the other because it maybe is kind of confusing to see that, but because it's including all journals up here, that's why.
And you can see the journal, the first two trades are the same, but then the next two are not. It's not good trades because MFE maximal, the 47,
you got it
right. That was too high.
Yeah,
47 is that's too high for MAE, and 57, 35. That I feel the first the first trade there was a good trade.
Well, I mean,
sometimes it just works out like that, but it tells you, I was holding on too long to gain.
Well, go back and look at these. Like, why did this work, and why didn't these work so well? And try to figure it out. And also here, I mean, you clearly got in at the wrong place in these trades here. I mean, it didn't even go one tick in your direction in these guys.
Well, so I meant to put only today's trades, but I guess those trades I was just playing around with it. So
that's not my point. I don't care about win or losers. It just go back. You can click on these things and go back and take a look. So Alan has actually he's using this share function in here. I'm looking at his journal. This is awesome. We can go back and look at all of these in here.
Well, plus it gives you the timestamp, and if you want to go back and look back at the date, whatever 1543.
I think this is I think this is my journal actually.
Is it your journal?
Yeah, it is. I think it is. Let's see.
Yeah, I don't know. Mine.
I'm sorry, guys. So on the confusion on that. Yeah, I think this is my journal. But anyway, I'm not sure what happened to the link, but you will be able to share.
I think the first one is mine. Yeah. Regardless,
Yeah, maybe it's in here. I'm not sure.
I put the link.
Yeah, I saw that. So we can try that again. But anyway, you will be able to share them, and this is fantastic. So why didn't it come up here? I don't know. Anyway, this is Alan's ahead of the game here. If you guys want to do this in the future and share your journals, and then get feedback as well. And I think you can share not everything. You can share a very specific
No,
journal.
you choose, yeah.
So you can
And then
take your trades and move them to that journal, and then share that with somebody specifically.
and then one thing that's I mean, this is pretty obvious. How you're always saying we should look back at the trade,
Yeah.
and see what happened. You have the exact pinpoint moment. So if you don't remember exactly, it's there for you, and you could just go, stream, just go back in time, and then you could see. Because a lot of times we're entering, or maybe we don't see that moment, but when you look back, and you're calmer, and it is over, then you give them more time to look at, because you have the exact time to look at, and you could just pull it back from your
right,
whatever you recorded it.
Right. Yeah, exactly. No, it's a great tool. We'll be using a lot more of in the near future.
I guess if they could put like a feature where like on the right side where the three lines are, just on the journal. Go back to
Yeah.
yeah. How do you open it? Double click it, or you just double click it. Yeah, that. If there's a way, if there could be a way to like copy and paste that into your entry, because I was trying to do snipping tools, whatever. It wouldn't let me I just wanted to copy and paste it into the Discord, and I couldn't. So one thing to maybe for the developers to work, because I think that would help also to put it straight into your posting.
Okay. Well, anyway, guys, I mean, look, I know this is kind of a divergent to it does apply to the Future Academy webinars here, and you can also see the direction we're going in here, with more and more on trading, more and more on your trade management, and it's not just visualization any longer. So we're gonna be diving deeper and deeper into this kind of stuff, and be able to, and that's part of the academy as well, is obviously not just the setups, not just the visualization of the order flow, now the trade management,
and it's objective.
It'll be more objective.
No subjection. It's objective. It's right there, black and white. So
yeah. So I'm really excited about it. Anyway, that's where we're going with this stuff. We're going to be opening up all sorts of directions with the trading part. So I would encourage you guys to start trading from the chart if you can. I know with the academy, that's the game. We want to see that. We want to see a checklist, and we want to see you trade from the chart so we can give that feedback. And then you'll get twice the credit for it as well. So use that replay mode. If you don't trade from it right now, go back in replay mode and then trade from it. Take the screenshots from there.
All right.
And then you're just going to get better and better and better. There's no doubt about it. So yeah.
And the more honest you are with yourself that you write down, I mean,
right.
You can't be shameful. Like I asked you plenty of stupid questions, but I'm sure those questions everyone had were embarrassed to ask. So sometimes it's better to ask than to think.
Putting the trade on even in paper is going to matter drastically, because you could say, hey, oh yeah, I'd be short here, but until you press the buy or sell button, even if it's paper based,
exactly,
like see it, see what you're doing, feel the feelings, feel the things you need to do, and what would you do, and go through all of the different spirals of scenarios, and it's a different thing. So
that's what Michael Jordan and Kobe said. He said that when they practice harder than a game. So when it comes to the game, it's it's much easier for them. And so the same thing you're saying, Jack.
I will probably make the effort to try to load up the replay if I can find some time in the evenings to participate in the double credit and look at things. And I think it's really good because there is some hindsight bias there of when I took the trade. But one of the things that I personally like with the replay tool is in real time watching it again, did I see something different?
Yes.
That I could have learned from, whether it's getting out early or extending or something like that. And I really, really look at those kinds of opportunities when I'm doing my journaling and when I'm doing my replays, is what can I adjust? What did I see differently the second time? And I try to make notes of those things.
And there's something added here too. Correlation tracker. You see the light blue line?
Yeah.
That's
Yeah.
the
I love
ES.
correlation tracker. And you
And
chose
then,
the same
it's
color as
so
me
simple.
too.
Oh, I love that color.
That color's great. Mine's dashed though, but it's okay. I forgive
But it
you.
really helps. It really helps. Like, instead of having like, three screens open, you can see what's going on in the ES by just looking at the tracker, and it does. They're pretty much. I don't think it's 100% positive, but like 80%, but pretty high positive correlation rate.
They have
And you
strong
can
correlation.
and you can do it with treasuries or anything else that has negative correlations, and that can also help you as a
Or
just
no
don't
correlation. No
no
correlation is
correlation.
also really good too.
Yeah,
Yeah,
you
because
have
it
it. You
tells
have
you
to
something
test them.
different.
Yeah, don't use it.
Yeah, one of the other things that I really look for in some of these setups is those correlations across different instruments. So we know that NVIDIA is like a heavy market mover at times, right? So like
Well,
really paying
I
attention to
heard
some of
once
those
from
concepts.
a pit trader I read in a book, and he said, if you could only be left with one thing to trade with, what would you be? And he said correlations. That's it. So he would stand in the pits, look across the different market, and look for the correlation.
Yeah, Shark Blue, exactly. What did I miss in real time, and what can I do better? That's
Exactly. Yeah.
one of the. I know that I say almost the same damn thing with 15 different people every week, and it's the journaling is supposed to make you better. And one of the reasons why I wanted to be a part of the program is literally to push journaling. And Bruce was like, "That's what I want you to do." So I get to do the thing that I want to do, and that's tell you to document what you're doing. It doesn't matter if it's paper, real money. I don't care if it's a funded trader account or anything else. Put your trade on the table, put the risk out there, see what happens, and see if you can improve. See if this is something that you can do for a long time for a career.
And
look into the
the best way to learn is to teach.
Yeah, exactly, Stephen. Exactly. That's why I'm here. Is the academy? Is to help. That's it.
Yep.
That's it.
Great.
I get to use Bookmap for free, but I pay for it anyway, to be honest with you, because I was paying for it before. I just get in here and I get to help people. And anybody that knows me knows that you can ask me questions at any time, and I love to help where I can. So
yes,
use
I've spoken to you
academy.
to the 10 o'clock ones. Yeah.
Yeah, especially the 10 o'clock ones. Yep. But I got to step out too. Slow down. It was great to see you, buddy.
Yeah. Thanks, guys. Is there more?
Thanks, Alan. We will speak tomorrow, Alan.
Thanks,
We'll
David.
catch you tomorrow, Alan, I'm sure.
Yeah, guys, let's wrap it up here. We're almost in the 2-hour mark, and there's still more content to go through. Some other guys, DNT, Shark Blue, Steven, you're all in here. We'll get to you guys first next time. Okay, so yeah, sorry, we'll have to kick it on down the road like that, but I've got you documented, and we'll get to your stuff first next time, and then take it from there. Unless there's anything that you guys in particular had to say or wanted to cover.
Just watch those videos with the sound on. You'll see it. The what I'm saying. Really,
Okay.
it's really, it's stupid. It might sound stupid, but like it's a little bit of a game changer. I can't explain it until you see it. Like you guys. So just watch it when you have a chance. Those little videos with the sound.
Sounds good. David, wrap it up for us, please. Take it home.
Thank you, everyone. Thank you. I'm looking at Shark Blue in terms of gratitude. It's humble being amongst everyone here. Everyone's a fab trader. It's really great, Bruce, been sharing these ideas. I learn from you, you learn from me, we learn from Jack, we learn from Bruce. It's a great community. So thank you all for taking time to be part of that, and have a great weekend when it comes.
Yeah. Thank you very much, David. Totally agree with you on that. And I mean, such good stuff. I kind of hesitate with some of the feedback. Sometimes it's easier than others, but I mean, you guys are doing some really good work. So we hope to help you.
Yes.
Build the community and all get better.
That's it. Very true.
Excellent. Excellent. All right. Thank you, David. Thank you, everybody.
Thanks, everyone. Cheers, Bruce.
Yeah. And thank you, Jack. I know he's gone. But anyway, thank you, guys. Take care.
Cheers. Take care all. Cheers. Bye-bye.
I guess. Nice.